Hi guys, welcome back to my YouTube channel. Today we're doing a talk on a local networking event, and I just thought I'd give you guys behind the scenes because we're going to some good content here on whether you should be trading in your own name or a limited company as a small business. So this is for small business owners, not necessarily for property. So sorry about that guys, but if you're a small business, definitely watch this video because we give some great pointers. But first, make sure you give the video a thumbs up to show that you're enjoying this stuff and I need to keep on doing it first and foremost. And also make sure you subscribe if you haven't. Yeah, perfect. So yeah, pleasure to be here. Thank you very much for bringing me on, Mark. Today, what I'm really talking about is, after Mark's kind of brief, and what's going to be most beneficial for you guys is just to run through the basics of tax and accounting, how they apply, whether you're being a sole trader, so trading in your own name, or if you're starting your business through a limited company. And I'm going to give you some pointers as to which direction you should look at going in, depending on how you're planning to run your business. So the first thing to basically outline is the difference between the two. So if you're starting your own business now, you're selling, say for instance, you're starting a baking business and you're doing this through your own name. So it's very easy to set up doing this. All you really need to do from a tax point of view is register with HMRC by the 5th of October following the year in which you start making, the end of the tax year in which you start trading. So if you start trading now, for instance, you've actually got until the 5th of October next year, because we're in the 2021-22 tax year now, to register with HMRC. You need to register for your UTR so that you can submit a self-assessment. On all of the trading profits here, you'll pay income tax on and national insurance. So if you've got no other income, your personal allowance would be available. This year it's £12,570. That would be available, which means you pay no tax on income in that band. Amounts over and above this, you pay 20%. And then national insurance as well, you've got the small profits threshold. So as long as your profits are under around £7,000, you won't pay any national insurance. On amounts above this, you pay a flat rate of about £160 a year and then 9%. However, if you are looking to grow a larger business, and especially if you don't want to bear the risk, so trading in your own name, you've got essentially unlimited liability. So if you were to run an accountancy business, for instance, it's quite a risky business in that you're giving advice to people on a daily basis, which could be very, very expensive if you were to get that wrong. If I gave somebody the wrong advice and made them pay thousands in extra tax than I should have, if I were trading through my own name, somebody could sue me personally, which means that my car, my house, all of my prized possessions would be on the line and potentially up for grabs in that event. Whereas a limited company gives you something called limited liability, which essentially means all of the wrongdoing in most occasions, all of the liabilities are contained within that limited company, so it's only the assets of that limited company that are at risk. So if you are going down if the business that you're looking to set up is a high risk, that's definitely a factor when it comes to choosing a limited company or your own name. A limited company, they're taxed, it's a lot simpler than a limited company in that at the moment it's a flat 19% corporation tax. So if you make £10 profit, £1.90, if you make £100,000 profit, you've got 19,000 corporation tax at that 19%. But if you are running a limited company, you'll pay corporation tax, and then if you also want to bring the money out, there's potentially a double taxation that applies because you'll need to put a salary through or dividends or interest on a director's loan account to actually extract that money back out. Whereas as a sole trader trading for your own name, because it's just you, it's assessed on you personally, that money's instantly there and you can spend it. Is that all good so far? Your thumbs up? Yeah, any questions on that so far?
No, thanks.
Okay, so really depending on what way you want to go down, if you are looking to grow a larger business, and by that I mean profits of around £50,000 or more, if you're looking to go there, you probably are going to be better off going in a limited company from day one, simply because when you factor in the tax on that, and if you want to reinvest your proceeds, if you were trading your own name, for instance, £100,000 profit, on anything over just over £50,000, you're actually paying 40% tax. But most people don't want to pull out all that money and spend it. They want to reinvest it and grow their business. Whereas if you were to be paying 40% tax on £50,000 of income, that's £20,000 in income tax you'll pay just on that alone if you're in your own name. On the flip side, if you're in a limited company, you'll be paying just the 19. So you'll be paying under £10,000, which gives you an extra £10,000 in cash to actually put back into your business. So that's a massive thing to consider when it comes to which route you want to go down. Other factors to consider include accountancy fees. So doing your own you can do your own self-assessment, or even if you want an accountant to do it for you, where you're doing in your own name, the self-assessment costs a couple of £100. Where you've got a limited company, you're looking at closer to £1,000 because there's a lot more work that needs to go into it. You need to do a full set of accounts, a full corporation tax return, a confirmation statement, and these need to be prepared in line with accounting standards. Whereas for a sole trader, you literally just need to put a profit and loss together, and that's it. Okay, perfect. So we've got a question come in. So yeah, if a sole trader, if you've got public liability insurance, would this not cover you? Yeah, absolutely, it would. You've got that insurance there, but if you're slightly underinsured, you've not disclosed the right information. Insurance companies are notorious for trying to wiggle their way out of something or other in any one place, or even if it's not a public liability issue, if you're slightly underinsured from a professional indemnity point of view, you might have the wrong liability cap. There are all of those kind of technical things to consider when it comes to insurance, whereas if you're in a limited company, you still need those insurances, but it's one less risk. Even if trade were to go bad. If trade were to go bad and you'd have too many creditors, in a limited company, you could basically get an insolvency practitioner in, they could wind the company up, that's fine. You could actually do damage mitigation, so you've got all of your assets protected, whereas doing this in a sole trade is a lot more difficult. So if anyone's got any questions, start dropping them in. Anyone got any questions so far?
I'm going to set up as a sole trader.
Yeah.
I'm basically quite a small working from home business.
Okay.
So what sort of insurance would be best for me? And my profit is not in the way high figures or anything like that.
Yeah, so what type of business will you be doing?
It's crafting.
Okay, yeah, so there, from an insurance point of view, you've got kind of next to no risk in the products you're selling. You're not really going to get sued. You're not doing anything in public. So there, you wouldn't need to worry about it, really. So yeah, for a craft business like yours, absolutely fine, right to do that in your own name. Main thing you need to register with is for your self-assessment for HMRC, and then start keeping track of all your expenses. So any expenditure you're incurring now, even if it's a trip on you going to Hobbycraft to get some expenditure, get some heat guns and all that kind of stuff, all of that fuel you could be claiming. So there's two ways you can claim your mileage expenses. When it comes to running it for your own business, you can claim 45p a mile for your first 10,000 miles, or you can actually claim a proportion of your running expenses. So say for instance you've got a car that you use 50% for personal use, 50% for the business, maybe dropping things off, doing suppliers, going to the post office, even meeting with your accountant and all that kind of stuff. You can actually claim 50% of your total running costs. And what you need to do is, when you've looked back at it, we'll look back and say, hang on a minute, which is higher? Are you better off claiming 45p a mile? Or if your car's not quite fuel efficient and it's actually you're going to have higher running costs, then we'd claim the higher of those two.
Yeah.
Same with working at home as well. If you use an area of your house to actually prepare it all, which looking at it, it seems you definitely do, with all the kind of stuff on the wall there, you can actually claim a proportion of your running costs. So if you've got rent or a mortgage, any of those you can actually claim. So if you're in a 4-bed house, you could potentially claim up to a quarter of your running costs in terms of electricity, heating, internet, all of those kind of expenses as an expense on your tax return, which is going to lower the amount of tax you pay.
Okay, excellent, thank you.
Another point would be to definitely try and get a business bank account set up as soon as possible, and just keep your records as kind of all through that business bank account, because as you're just starting out, it's quite easy to use your own bank account for things here and there. But if you get an accountant later on, having to give them your personal bank account and then filter through, hang on, this transaction's business, this is personal, it takes a lot more time. Whereas if you just get a business bank account set up, you can use banks like Starling, Tide, Counting Up. A lot of those ones are actually free to set up, completely all online. You can get apps from them as well, so you can do it all on your phone. And then it just keeps everything nice and neat, all in one place.
Okay, thank you.
Would it be able to get just another second normal bank account rather than a business account?
Yeah, if you're trading for your own name, you can. That's absolutely fine. If it's a limited company, it does need to be in the name of the company. But yeah, otherwise, yeah, just separate bank account. That's you could pay, yeah, second one with a different bank or even with the same bank. That's absolutely fine as long as it's just a business transactions going through it.
Joshua, Sharon has a question. I am a counsellor, also looking at sole trader. Is this advisable?
Yeah, I'd say so, especially with there, you can have the right insurances in place, member of professional body, things like that. The risk there is it's a pretty low risk industry. As long as your income is not going to be over £50,000 or so in the short term, go through your sole trader at the moment, and as you grow, as your business grows, you can also move into a limited company if you need to at the future. But to keep costs low to start with, last thing you want to do is starting your own business and all of a sudden you've got a limited company and you need to pay an accountant £100 a month. With a sole trader, you can keep costs as low as possible, and then as things do progress and you find your feet in business, then look at whether it's worth moving to a limited company.
Joshua, sorry, I've got another question. You sort of touched on it a little bit earlier. I was just wondering, if I wanted to start a business like today, for example, regarding startup costs and things, what could I actually claim from? Is there so say for example, I've been sort of doing a bit of marketing or getting loads of bits together since January, but I actually register with HMRC today.
Yeah.
Is there a pre-period where I can claim my expenses back?
Yeah, 100%. So you can actually go back up to 7 years for pre-trading expenditure. So yeah, any marketing costs, any courses potentially, anything on those lines, getting your website ready, literally anything that you can give a justifiable argument essentially that this is a business cost, you can go back up to 7 years, and that's treated as if it incurred on the first day of you trading. So if you started trading today, you can look back 7 years and claim all of that as if it incurred for tax purposes today.
Wow, because I actually only thought it was about 3 months before you had to register, you was allowed to claim that. So that's quite interesting, guys, really, 7 years.
So yeah, you might have been thinking of for VAT purposes. So when your business is large enough, basically when you should register for VAT is if your turnover exceeds £85,000, or if you're basically making business-to-business supplies. But when you register for VAT, you can claim back 6 months for services. You can claim back the VAT on that. And if it's an asset that you've purchased, computers, tables, things like that, you can go back 4 years. So that could have been that one.
Thank you for that. Thank you. So my question really to add to that is, wouldn't the HMRC say, why does it took you 7 years to start your business?
No, it's laid out in the legislation. I'm not quite sure why it's 7 years, but that's specifically allowed under the Income Tax Act. So they're more than happy with that.
So as long as you've got a receipt, say you bought a laptop.
Yeah, 100%. With all of this stuff, yeah, receipts are golden basically. With anything from a tax point of view, the main thing is that you've got some kind of receipt to show that you purchased that asset.
Is there any because I've shown sort of like cash projection regarding a spreadsheet. Because everyone's at different levels. Is there any, software that you could possibly recommend that the guys might be able to use that is probably not too expensive and probably easier to use than others?
Yeah, absolutely. So some of the best software out there, so you can use QuickBooks, Xero, Free Agent. They're a really good software. The main thing that I look for really is whether you get something called bank feeds. And this is what makes your bookkeeping really easy, in that it links. The accounting software itself links to your business bank account, so it automatically pulls through all the money that comes in, all the money that goes out, and then it just allows you to basically allocate it. So, okay, that's a sale, that's the money I put on marketing, this is that, and then once you've done that and reconciled your bank account, you can click on the software and see what your profit is.
Yeah, I use QuickBooks, so I've already told the guys about QuickBooks, but I didn't want to preempt anything. I wanted you to sort of say that. So, is there any other questions, guys?
No, it's been really helpful. Yeah.
And can I ask a question? Imagine my company is giving services to another company, and sometimes they set me up under the IR35 umbrella. So I'm supposed to have my own business. So in that case, should I go for sole trader, which because the liability is short, or should I set up limited company?
So it depends exactly on the terms of your engagement with the company. So if your contract is caught under
Actually, I have 6 or 9 months contract doing some work for them,
Yeah, so with the changes to IR35 now, you're basically deemed an employee almost if your contract does actually fall under IR35, so it wouldn't make too much of a difference. But if you are doing other work for other people, then especially if you're a higher rate taxpayer, or you would be, depending on the amount of money you're looking to earn, then most people often go for a limited company.
Okay, thank you.
Yeah, IR35 is a bit of a hard one.
Yeah.
Especially when you're consulting, or like you say, am I working for you? Am I working for them? Am I being a subcontractor? How's it work? So yeah, I've been sort of touching on I-35 myself. So anything else, guys?
Thank you.
Well, thank you so much, Joshua. I really do appreciate your time.
So I really hope you guys enjoyed that video. Short and sweet, lots of good content in there as well. Loads of golden nuggets, and hopefully some key takeaways for you guys when it comes to knowing whether you should set up in your own name or as a limited company. What are the key obligations you need to know, and basically what the taxes you have to pay are when trading between the two. Make sure you've given this video a thumbs up if you haven't already, and remember to subscribe.